Hey everyone, welcome back to Financial Freedom Friday, where we discuss tips and strategies to help you achieve financial freedom. Nate Scott here again. It's great to be back. Today we're going to talk about the difference between cash flow and appreciation, and why some forms of investments are good for certain things and why other forms are better for other things. So there's really two main purposes that people invest money to, either to generate cash flow or to generate appreciation or increase in value or compound interest or something like that. And I've got really 3 points I want to focus on, kind of the difference in the two and which one you should really focus on. The first one would be that I have found that focusing on appreciation tends to be a bit more speculative, while cash flow can actually feel more real. And what I mean by that is we've all seen some people, we probably all know people who have done very well in maybe the cryptocurrency market, for instance, or the stock market of late. And they've invested a little and they've got a lot, and it feels like you seem like you're rich, but then in the back of your mind you realize, well, it came easily and it could probably go easily. You know, and the stock market could crash. We're expecting it to crash at some point. The cryptocurrency is extremely volatile. So those things are more focused on appreciation or change in value, whereas the cash flow can be pretty real. If you go buy something and it's spitting out cash flow, then you're getting a check each month. It can definitely feel a little bit more real than the appreciation because you actually have the money. It's right in your hands, and it can't just change the next day. It's actual real money. So I tend to find out that appreciation can be a little less real feeling, a little more fake, iffy, whereas the cash flow can feel real solid at times, and it's not quite as speculative. The second one I found is that cash flow, I find, is much more important when striving for financial freedom than appreciation. And the most important thing to achieve when to look for when achieving financial freedom and really searching for it is my income greater than my expenses? Can the money coming in be greater than the money going out each month, even if I work or not? And that's a really exciting time for you to get to. And so the assets that produce more cash flow focused, I see as being able to produce financial freedom a little bit easier and more securely than more of the appreciation assets would be stocks, mutual funds, cryptocurrency, things like that don't really tend to spin out much cash flow, if any. But they can be a decent job at increasing in value. The problem is that when it comes time to actually take income from it, if it's not really a cash flow asset, something that really is producing cash flow, then you have to sell it to get your money. So if it's a stock or a mutual fund or crypto, you have to actually sell the assets to get the money. The problem is, as we've already kind of talked about, it's a little bit more speculative because the valuations change quite often in those worlds, depending on the day you want to sell off. If it's focused on appreciation, we've seen housing markets burst, the appreciation. Rent checks may still come in, but your value may go down. We've seen stock market bursts. We've seen cryptocurrencies go crazy in the more modern age. So it can definitely be an issue when you're trying to get cash flow to live off of from those assets. And cash flow is always going to be king. It's always the most important thing when trying to be financially free is my income greater than my expenses? To be honest, I would rather have, let's say, or I'd ask you the question, would you rather have maybe $1 million that you can pretty safely take out 40 to 50,000 of it without really fearing about running out of money per year in income? Or would you rather have $800,000, a little bit less, but it's spitting out $60,000 or $70,000 of income? A lot of people would say, well, maybe these assets don't appreciate as well, but they produce so much more income that's what I really need to live. So that's the second point, is that I tend to find cash flow being the most important goal whenever you're trying to achieve financial freedom. And the last one, I'll hurry up and get to it, is that what I see as the end game for appreciation, for buying something that appreciates, is to transition from that asset into an asset that does a great job producing cash flow. So it's not that I'm against assets that appreciate necessarily, but I would see the end vision for you, if you're trying to boost a lot of money, is that appreciation can definitely shorten the time frame. It can be a springboard for purchasing the cash flow assets. So if you can do really good appreciating and accumulating the money, then it would be easier to produce cash flow. But probably your goal, and think of this as you're trying to build wealth, is that at some point I may want to get out of this asset that does a pretty good job appreciating but is more volatile and I never know exactly what the value is going to be. I may want to try to make a big buck here and sell it and transition and use the appreciation as a springboard to purchase a cash flow asset that spits out checks every month, real money. So those are three things to really keep in mind when you're focusing on those, the differences between cash flow and appreciation and which one to focus on. I hope it's helpful to you. And remember, if you don't build your freedom, nobody will do it for you. So let's get to work, and we'll see you next Friday.